I would try and know everything about everything small, and I would find something.
Hi Team Value, JJ here, welcome back. Well, today we're going to have a look at more recent Warren Buffett. He was asked the question, if he had less than $1 million to invest now, if he was just starting over, how would he invest? And he has said that he could get 50% per annum returns, he thinks, if he had that amount of money to invest. So he answers the question, and he does say that he invests in small caps. Let's take a look at what he said and I'll react to it.
Towards the end of 2018, you mentioned that you guarantee you could make a 50% annual return if you had to start again with under $1 million. The question is, if tomorrow you woke up in the body of a 20-year-old American.
Your body. But that's fine.
And your name was now Warren a la carte. And you had some money to invest on a full-time basis. What method or methods would you use to achieve that return? Would it involve flipping through 20,000 pages of Moody's manual or similar publications?
Yep.
Or finding, to find sticker butts? Or would it be hunting for great companies at a fair price as Mr. Munger would? Or would it be a combination of both, with opportunity cost serving as the final arbiter of which method to use, given that your investing opportunity has now broadened significantly? Thank you. Khop kun khap.
Good question. I'm glad you came. And the answer would be, in my particular case, it would be going through the 20,000 pages. And since we were talking about railroads, I went through the Moody's Transportation Manual a couple of times. That was 1,500 or 2,000 pages, or probably 1,500 pages. And I found all kinds of interesting things when I was 50 or when I was 20 or 21. And I don't imagine there's anybody here that knows about the Green Bay and Western Railroad Company, but there were hundreds and hundreds of railroad companies, and I like to read about every one of them. The Green Bay and Western, in those days, everybody had a nickname for railroads. I mean, that was just what Northern Pacific was, the Nipper, and the Phoebe Snow was one of them in the east that used to go up to Cornell, and the Green Bay and Western was known as grab baggage and walk, and GB&W. And they had a bond that was actually the common stock, and they had a common stock that was actually a bond. And, that could lead to unusual things. But they wouldn't lead to unusual things that would work for you with many millions of dollars. But if you collected a whole bunch of those, which I set out to do, and actually that's what impressed Charlie when I first met him, because I knew all the details of all these little companies on the West Coast that he thought I would never have heard of. But I knew about the Los Angeles Athletic Club or whatever it might be. And he thought he was the only one that knew about that. And that became an instant point of connection. So to answer your question, I don't know what the equivalent of Moody's manuals or anything would be now, but I would try and know everything about everything small. And I would find something, and with $1 million, you could earn 50%.
Buffett's answered a similar question to this over the years quite a few times. This question often comes up: if you had $1 million or less, and he has talked before about having 100,000 and less, what would he do? And he more or less says the same thing, and it's looking for these anomalies in small caps, and he really means micro caps as well. Going through the Moody's manual, which the equivalent today would be sifting through, not the Moody's manual, but we have financial software like FinChat and other things that we can look through, screeners of stocks of small caps. We can put a limit on the market cap and just look at things that other people aren't looking at. Institutional analysts just aren't looking at them. They're just too small to move the needle for the funds that they have. They pretty much wait till these good companies grow. Of course, there are a lot of bad small caps, and there's more risk involved there because of that. But Buffett knows what he's doing, so he'd definitely be able to do that. He said that he could get 50%, pretty much guarantee 50%, by looking at these anomalies in small caps. And there are quite a few good investors who still do that. And if they're a good fund manager, they'll make a lot of money and then go up the chain because they can't find enough in the small caps to move the needle, just like Warren Buffett has with Berkshire Hathaway. That's at the other end of the spectrum where they've got nearly $200 billion. There's no way that they can look at even small caps, and even mid caps are difficult because they have to buy pretty much the whole company, and even that's not enough, to move the needle. They're looking at mega caps, large caps, mega caps. The pool of companies that they're able to look at is getting pretty small, maybe 30 to 50 companies around the world that are big enough for Berkshire Hathaway to invest in if it's cheap enough and a good enough company that then he can get the return that he's been getting over many years. But he did get this return, very good return, way back when he was younger. He's looking for these small caps, and it was a connection with Charlie Munger because they were both looking at these similar things. And there are investors around today. I invest in small caps myself. That's what I favor. I do have a few large caps like Alibaba I've mentioned and Spotify I've mentioned, but most of my portfolio is in small caps and mid caps now, but more tending towards small caps. These anomaly situations where institutional analysts just aren't looking. Now, if you're getting value out of this Warren Buffett episode so far, I really appreciate it if you remember to smash that like button to help the algorithm to spread it to more people. Thanks.
But you have to be in love with the subject. You can't just be in love with the money. You really got to just find it like essentially like, people find other things in other fields because they just love looking for it. A biologist looks for something because they want to find something. And that's built into. I don't know how the human brain works that much, and I don't think anybody understands too well how the human brain works. But there's different people that just find it exciting to expand their knowledge in a given area.
Part of what he's saying here, although he does tend to ramble a bit, that it takes time to do this. Even when he was doing that, going through the Moody's manual of many thousands of stocks, this takes a lot of time, and a lot of investors just don't have the time or don't want to learn stock analysis enough to be able to just hunt out these bargains. And so Buffett has said in the past to just buy an S&P 500 index fund ETF if you don't have the time or inclination to do it. But there are people out there, even small investors, are competing with other investors to find these anomalies.
I've had the luck of meeting a lot of people that are unbelievably smart in their own arena and do some unbelievably dumb things in other areas. So all I know is the human.
So he's talking about the people who are smart in other fields who aren't necessarily good investors, possibly because they don't have the temperament for it. Intelligence isn't the only thing. There's that famous story of Isaac Newton, who during the South Sea bubble invested in that company, and then it ran up. He sold and he made a lot of money, and then he went back in and it was a bubble, and he lost a great deal of his fortune in that. But he was undoubtedly an incredibly intelligent person, but not with the temperament for the market. And so that's what Buffett's talking about there, I think.
The brain is complicated, but it does its best when you find out what your brain is really suited for, and then you just pound the hell out of it from that point. And that's what I would be doing if I had a small amount of money and I wanted to make 50% a year, but I also wanted to just play the game. And you can't do it if you don't find the game of interest, whether it's bridge or whether, whatever it may be, chess, or in this case, finding securities that are undervalued.
He is saying here that you have to be really into it. You have to be interested in it. A lot of people sort of dabble in stocks, but you really do need to, if you're going to do stock analysis, dedicate a significant amount of time or be able to do that to learn, because it's really not easy, especially finding these smaller opportunities. You notice on YouTube there's a lot of videos about popular stocks, cult stocks. We've got Tesla, we've got SoFi, we've got Palantir. What else? We've got Robinhood. And are they actually going to work out well? Some of them could. I'm not saying they wouldn't, but Buffett here is talking about going off the beaten track, where people aren't looking. And yes, it's not going to be popular. He's saying that this is where to find the value, find the alpha, because nobody else is looking there.
But it sounds to me like you're on the right track. I mean, anybody that'll come all the way to this annual meeting has got something in their mind other than bridge.
Now, the vast majority of my current stock portfolio is in small cap stocks, so I do agree with what Warren Buffett's saying here. And my Patreon members know all about those stocks, the portfolio, and I talk about small cap stocks, things there that I don't talk about anywhere else as well. So I'll leave a link in the description if you want to check that out. Now, in the episode description, I'm going to put some links to some related episodes about Warren Buffett. And if you're watching this on YouTube, I'm going to put 2 videos here to recent episodes I've made about Warren Buffett, what he's been saying recently. So go and see either of those now if you want to. And thanks to everybody for watching or listening to this one, and I'll see you in the next one.